Uh, well, where does one hide at this point? Even consumers don't seem to be doing well. HUL with its numbers are disappointed. IT also weak slightly. But do you think something like IT, which has more global exposure towards developed markets, could be a place to hide for people?
No, I think in this kind of market, the only way you can save yourself is being in cash, which is, broadly, if you're in the market, you'll get hurt. Maybe a percentage plus or minus, but if you are in equities, you will get hurt in this kind of a downswing. It is impossible to have one stock which is going to be winning as a predominant in your portfolio. So I don't know how people can, what you can buy in market which will save you from 10% downswing in the market. The best way is to stay on the side or stay in cash if you don't want to take the market risk.
Are you getting a sense that there is much more, selling to come? After all, today it's a bulk of the selling has happened on pretty low volumes. We've just about managed to get to 1 lakh crore. Do you think a lot of people are left out there holding the baby, and therefore the technicals of this market are pointing to further selling?
I don't have any specific understanding of that, but at some level, because earnings are very good, valuations have become much more comfortable. The bigger investors in FIs, they have not been able to sell any meaningful quantity. I think this is the first month when they are talking about some net negative figure, which is also not that big. So I don't think there is any major. It's the lack of buying. Nobody, domestic mutual funds, domestic insurance, foreigners, nobody is a buyer net on the ground. So even if there is 1,000-2,000 crore selling in a 60-70 lakh market, I think it is putting a lot of pressure on the prices.
Absolutely, Raamdeo, that's the point. The consensus trade that it's no longer attractive right now to buy. So when do you think that opinion will start diverging and people will start finding value?
I think values are emerging already. We are clearly seeing that some of the stocks are becoming very reasonable. Your, say, banking sector led by, say, SBI or HDFC Bank or whatever, they are down almost 25% from their peak, maybe even more. So 10-11 times earnings, 2 times book. I don't think these are very unreasonable valuations. And it's not only banks. There are other stocks also. Even Bajaj Auto, if you look at it, or so stock after stock, you see values. Can the things be 10% more cheaper? Obviously stocks can go a little lower, but my sense is that slowly values will emerge, and at some point of time, domestics will also buy. From who will buy, what he will buy, that only time will tell. But a little more change in the headlines, some moderation of the inflation, some constructive buy even from FIs. I think things will start changing as the valuations start looking better. My sense is that buying will emerge.
So very soon, do you think that it will make a lot of logical sense for people to argue that it doesn't make sense to be in cash when some of the valuations are so mouth-watering?
No. What I'm saying is I'm not saying go into cash. I'm saying that the only way you can save yourself from the downturn in the market is being in cash. So being in cash, there are only 2 ways to be in cash. One is that you are not invested, so remain uninvested. Or if you are in stocks, then you sell and then stay on cash. There is no other way to avoid the market risk. But at this juncture, I would not suggest anybody to outrightly allocate 5-10 to pull out 10% or 20% allocation from the market. Probably the time is coming to look into the stocks very closely and figure out what we understand, what is the true value, where is the margin of safety is higher, and start allocating, maybe not fully, but 10% of what you want to put. I think you should start looking at investing in, because earnings are good. I don't think the growth is going to go down to 5, 6, 7%. I think we have a fairly good story still out here.
Well, finally, your take on Reliance, Raamdeo. That one didn't participate in the rally anyways. Is that at an end to its woes, or is there more to come?
I don't know. We are neutral. Our analysts we have 2-3 analysts onto the stock. So we monitor this very closely, and their recommendation is neutral at this juncture, because I think gas volumes are not picking up as per them, and incrementally new projects where they can make huge allocation. They have a tremendous cash flow of about 30,000 crores per annum. So where exactly they should deploy? I think we are getting to hear that a lot of money is going into telecom ventures and things like that, where I think at least we don't have understanding of how money will be made in those incremental investments. So I think there's some kind of lack of visibility in terms of earnings growth from here as per our analysts. So we are of the view that at this juncture we should be a little light on Reliance.